Good day, everyone. You are welcome to this week's Business and Investment Tips program, a production of Christ Church Radio. My name is Ayodeji Ebo, an investment professional. This week, the focus is on Nigeria's Q1 2021 GDP numbers. The National Bureau of Statistics recently published Nigeria's first quarter 2021 gross domestic product numbers. The Nigerian economy sustained its recovery as real GDP grew faster at 0.51% year-on-year from 0.11% year-on-year growth in Q4 2020. GDP measures the value of all final goods and services produced in any economy in a given period, usually a quarter or a year. GDP tracks economic activities and serves as a barometer to measure how an economy is doing. This report used the output approach. Real GDP reflects the actual value of goods and services produced without the influence of higher prices. For instance, the GDP of a sector can be affected by both the volume of goods and services produced and the respective prices. However, what matters is the increase in goods and services produced rather than price increases. For clarity, year-on-year means comparing this quarter's numbers to the same period in the previous year, Q1 2021 versus Q1 2020 in this instance. By broad sectors, the non-oil sector, which accounts for 90.8% of GDP in Q1 2021, grew slower at 0.8% in Q1 2021 from 1.7% in Q4 2020. This can be attributed to the slowdown in the telecommunications sector, which grew by 7.7% year-on-year in Q1 2021 from 17.6% year-on-year in Q4 2020. The federal government restrictions on new SIM card sales affected the performance of the sector. However, the oil sector recorded significant improvement, though still negative. The pace of contraction slowed from minus 19.8% year-on-year growth in Q4 2021 to minus 2.2% in Q1 2021. This can be partly linked to the recovery in oil production to 1.72 million barrels per day from 1.56 million barrels per day in Q4 2021. Nigeria's GDP is grouped into three broad sectors with contribution to GDP as follows. Services 53.9% in Q1 2021 versus 54.3% in Q4 2020. Agriculture 22.3% in Q1 2021 versus 27.0% in Q4 2020, and industry 23.8% in Q1 2021 versus 18.8% in Q4 2020. These sectors grew by minus 0.4%, 2.3% and 0.9% year-on-year respectively in Q1 2021. Clearly, the industry sector came to the rescue, recovering from minus 7.3% in Q4 2020 to 0.9% in Q1 2021 as the agriculture and services sector slowed down in Q1 2021 relative to the fourth quarter of 2020. The agriculture sector growth, 48% share of employment as of 2017, moderated due to slower growth in the crop production and livestock subsectors. Obviously, there needs to be a major focus on improving the efficiency of the agriculture sector through improved quality of seeds and more adoption of mechanized farming to raise our yield per hectare and per labor. Also, this can boost government FX earnings as well as reduce demand for FX, thereby supporting stability in the naira. Similarly, further attention should also be placed on the manufacturing sector, which grew by 3.4% year-on-year in Q1 2021 and trade minus 2.4% due to their ability to generate employment with their share of total employment at 7.0% and 14.0% respectively as at 2017. The major cause of the drag in the trade sector can be attributed to FX illiquidity challenges. We expect much improvement in the GDP growth rate in the second quarter of 2021 due to lower base effect and the significant reduction in the COVID-19 spread in Nigeria. Notwithstanding, the fiscal authorities should sustain the current momentum in supporting the economy to grow beyond the population growth rate of 3% for inclusive growth. This should also be positive for the equities market, although rising interest rates remain a major downside risk. Thank you for listening. Please join us same time next week for another interesting and insightful session. For comments and feedback, kindly forward to ccradio@rccgchristchurch.org or send SMS to 07082463747. Stay blessed.